to our 15th, I think it's the 15th or 14th podcast for this week. And we're going to jump right into it.
Morning, Larry. Morning, Graham.
Larry, how's it all?
So let's jump into something which is interesting, and it's right on the tip of all of our tongues. Let's talk about the probability in the next 6 months to a year that we're going to have a recession. It's almost inevitable. So let's talk about what is the probability, and maybe Graham, I'd like you to start with this. Why don't you talk about and tell us what you think? What are the charts telling you? How accurate are they? And then I guess we're going to get your best guess as to what is that going to do to digital assets, and then tie that into this crazy halving of Bitcoin, which is supposed to be, a supersonic market. When those three things come together, what are we going to see?
All right, starting straight off the bat with the hard questions.
Yes.
Which is good. So I'll just chat briefly to that while I pull up a chart. So look, the chart I want to just speak about is the inversion of the yield curve, which over a fairly lengthy period has proved to be as good an indicator of an upcoming recession as any. So let's see if I can pull up the screen here. So essentially Sorry, Larry, you're just going to have to give me a moment here. Maybe you have the video.
We're not in a rush. The recession's not here yet. Graham, do you know how long a recession typically lasts?
Sorry, I'm not going to be good at multitasking yet. Just give me a moment.
All right. Don't say another word. Bilal, do you or Glenn know how long a typical recession will last?
Larry, let me jump in here while Graham puts up his Easter eggs. So the probability of a US recession this year is 57.7% compared to compared to 54% last month. And just to give you comparisons, and 5.49% last year. So, there's so many variables to whether there's going to be a technical recession or a long drawn out recession. I mean, it's very hard for anyone, even the policymakers, to predict that. But in terms of percentages, you can see that it's certainly a lot higher than it was a year ago, and quite frankly, even within the last month, those stats have changed significantly. So we're getting, we're over 50% now of that possibly taking place. So that's those stats are starting to show some sort of indication or a trend.
Yeah, I also understand. I just looked it up that the average recession lasts about 11 months, which, that's a tough time for everything. Prices are falling, interest rates are falling, which does help certain sectors of people buying. But for the most part, it really helps those who have money and really hurts those who don't. I don't know how it's going to affect Bitcoin in the digital asset space, but Graham, with 100% certainty, is about to tell us how.
So look, all I can do is pull up a couple charts and look at some of the data that's coming out. So, the one that I think one needs to pay some attention to is the yield curve, and what's famously known as the inversion of the yield curve. So just a little bit of background to the context here. In normal market conditions, the 10-year yield on the US Treasury typically trades at a higher yield with a higher yield than the 2-year yield on the 2-year Treasury note. And the psychology behind this is that your longer term debt should attract a higher rate of interest. If I were to loan you money for 10 years versus 1 month, because 10 years is a long time and many things can go wrong, I would expect to be compensated at a higher rate than I would if I were lending it to you for a shorter term. But what happens when the market gets nervous is that you typically see investors move. You see that the borrowing cost of short-term debt increase versus long-term debt, and that's when you have what's known as the inversion. So that's when the 2-year yield is then higher than the 10-year yield. So what you can see on the chart here is that blue line at the bottom there is 0. So that shows you when the yield is trading the same on the 10-year as the 2-year. And when it drops below that number, that's drops below 0, that can be defined as an inversion of the yield curve. So what this means practically is that over history, going back all the way to 1990, that when there's an inversion, there's almost 100%. It's almost 100% leading indicator of predicting or suggesting that there's going to be a recession that then follows. So whether we look at the dot-com bubble in 2000 or the great financial crisis in 2008, COVID pandemic, those events have been as a result, or at least followed, an inversion of the yield curve a couple of months before. And what's interesting is that the recession doesn't typically occur on the inversion. It occurs after the inversion takes place, and then on the recovery of the yield spread, then the recession typically kicks off. So if we look at where we are now, we got to a place where the inversion of the yield curve was greater than what we've ever seen in history. So if you're going to take this chart as a fairly reliable predictor of a potential recession, then we have to pay attention to this and say that there's a fairly high probability that a recession is going to follow in the next couple of months.
So Graham, if we look at that and we assume, okay, let's go with the fact that the chart's pretty accurate, and so we're going to have a recession. Yes, we don't know how long it's going to be, but let's just play around with the 11 to 12 months on average. If it's less, obviously that's better. If it's longer, that's worse. So 2 things. How is that, and I know it's really just a guess unless there's any history to show that during a recession, here's how the cryptos played out, but I don't think the market was as strong during the last recession for cryptos to tell us. So what would be the guess? And then, of course, the wild card is, does the halving of Bitcoin in the middle of a recession, does it have any effect or not really?
So I know you've asked Graham, but I'd like to be rude and jump in here, if I may.
Please, rude is always good.
So, Graham, just give you a chance to breathe. And by the way, I mean, the other thing is I crave attention. I'm not getting any. So anyway,
Glenn, why don't you just finish talking? If you want, the rest of us can leave and you can just chat with yourself.
No, I'm obviously kidding. But sure. The point is that, in a recession, simply people have less disposable income. So it's going to be an interesting, it's a good question, because it's going to be an interesting outcome or response to the cryptocurrencies, because as we all well know, they continue to surprise during various events. But simply, it's considered a riskier asset. So those with less disposable income are going to avoid and not be interested in acquiring those risky assets. So only your wealthy may see the opportunity and continue to build a position on their chosen cryptos. So it's a really interesting thing to observe. Should we be in a full-blown recession, and to see how these cryptocurrencies react? Because again, just to end before I go to Graham, it's history has shown less disposable income, and as a result, collectively, people will avoid the riskier assets.
Well, what if you look at the last recession? I don't know when it was, but if you did look at it, are the wealthy? Was there more money being put into riskier assets by the wealthy? Clearly, by the average person, they were hunkering down and could barely make ends meet. But is there any statistics or information or data that shows that during a recession, the wealthy all of a sudden start making heavier investments into risk-based assets? I don't think so. And then because I don't think the digital assets were as big during the last recession as they are today. I can't see them running to pump more money into the digital asset space at that time. And certainly these major corporations that have 2, 3, 5% of their investment dollars in digital going more in. I don't see that, but what are your thoughts?
I mean, the first question is, when was the last recession? I think we're going back, 10, 11, 12 years?
Could be.
So,
Yeah,
I mean,
so there was no digital assets.
so that's basically the lifespan of Bitcoin. So we don't actually know. Sorry.
Right. We don't know, but I don't see them going in
Yeah.
during a recession to the more heavier or more volatile investments and way more speculative if they don't have to. But then again, you take a guy like a Michael Saylor who may look and say, wait a minute, if the halving hasn't already turbocharged it during this recession, and maybe the prices are decreased, he might jump in more going, once it's over, oh my God, you're going to get this boomerang going back up. All possible, I don't know.
Yeah. Now, Larry, if I may add, I think what's important is to what extent counterparty risk um, is a contributor to that recession. If counterparty risk is a major factor and investors perceive a high level of distrust towards banks and or governments, then one may see Bitcoin uh, perform better as a flight to safety, as we saw when a Silicon Valley Bank, Silvergate, and Signature had their issues. We saw Bitcoin correlated to gold and went up, although tech stocks went down. And so that is a situation where we don't have a precedent in a recession yet, but if there is a severe counterparty risk, the white paper of Bitcoin aims to mitigate that particular risk. However, any recession has a large amount of just standard market risk, and as Glenn points out, tighter liquidity constraints, which would drip into the crypto market, and people will have to sell their most liquid assets first. And if you're trying to draw on your home loan or sell your shares and your crypto, you're going to sell your crypto first to pay your school fees. So that is where crypto could most likely do badly in a macro recession, unless there is a very significant counterparty risk shock.
So Bilal, you're saying counterparty,
that
meaning,
makes people believe that
a
crypto is actually
Binance,
their
an
best asset
FTX,
to not
wherever I buy my
lose,
Bitcoin. But
and actually to buy more of, to
the
protect
nickel and dime
their wealth.
buyer is a nickel and dime buyer because that's all they can afford during a recession. Your nickel and dime buyer isn't coming in. Now you go to your big boys and girls who have serious money, and you might sit here and say today it's a long-term investment, 5 years, right? But yet we're not in a recession, but you're not seeing these tremendous investments or large amounts going in by the big boys and girls or the big corporations today. You see them very, very hesitant. You see them frozen in a way. So I'm not sure where we think the money would be coming in. Where's it being driven from in a recession that anyone's going to want? I mean, they won't even put it in now at 20 or 25 or 27. They're not rushing in. And everyone, certainly all of us and anyone who believes in it, figures, oh my God, in a year from now, I mean, won't it be worth 50, 60, 10 years from now, 5 years from now, what it'll be worth? 2, 3 times? That's a phenomenal return. But you don't see anybody doubling up. So why would they in a recession? Okay, at least we got that answer.
Yeah, yeah. It's a long question. I mean, I think Warren Buffett said it, right? When the tide comes out, you see who's not wearing their shorts, right? And I think it's a market now where we're looking at recycling of flows. It's not new money coming into the market that pushes everything up. It's money that is coming out of one place and going into another place. So somebody's got to win and somebody's got to lose because there's less money flying around. So we've got to be more precise about what we allocate to and when we allocate to that particular. Bitcoin performs as a safe haven asset to mitigate counterparty risk. But I don't know what probability to put on that because statistically, as you point out, we don't have enough precedent to mathematically calculate that. But it is very possible. The more likely situation is a macro recession, which creates a liquidity crunch that pushes prices down. And when those prices are then depressed is when we would allocate
But Bilal,
and ride the
where
boomerang back to
during
us
a
as it comes
recession,
up.
since we've had plenty of those, if you go back, what asset category seems to get more money going into it? Is it gold and silver, real estate, treasuries? What asset class?
I can take that one, Larry. So typically in a recession, you have a correlation of
Yeah.
one where your risky assets, your equities, your real estate, even gold and silver, all go down together. All right. So there's really no place to hide in those type of assets. The only recipients is really the dollars, seen as the safe haven in terms of your fiat currency. And even if it's not, it depends what you're measuring against, right? If you're going to measure the S&P 500 versus dollars, $1 in the bank is still $1, but it's going up relative to the other asset that you're looking at. So that's because there's funds flowing out of the equity market into the dollar. And then your other typical safe haven asset is treasury bonds that investors typically go to. And then you have a capital appreciation of that asset. So we saw that play out in COVID as well. Those are really your only two places to hide was first world debt as well as the dollar. And I don't see why this time would be any different. I think there's the possible, but I would call it unlikely case that gold and Bitcoin goes up in the short term. What I typically think will happen is that you have your dollars appreciate in relative value, probably your government bonds as well, unless there's a sovereign debt crisis. That's these things are always possible. And then what you have after that is then in the recovery. Then you have, depending on what the form of recession is, if it's a loss of confidence in the banking system and governments, like B said, then you would potentially have the move into gold and silver and Bitcoin, and you could get a very strong recovery in those assets. And obviously, would look to buy that dip if it presents itself.
Okay, so then if, quote, gold is a store of value and Bitcoin and gold are both stores of value, then if gold would be expected to go down in a recession, so would Bitcoin. So let's assume that Bitcoin would be expected to go down. But during this particular recession, you have the entire digital asset category, which is bigger than it's ever been, certainly before the last recession. And then the next biggest thing is you got the halving of Bitcoin. And so does it not matter? If we're in the recession and gold comes down and Bitcoin's just going to go with it and nobody's going to care that there's this halving? Or do you think the halving will have some gravity resistance and pull back up Bitcoin? Is that a possibility or probably unlikely?
So I've got a fairly firm view on this. I think if the world is going to recession, the Bitcoin halving in the short term will count for very little.
Okay.
And I could also point back to COVID, which happened shortly before the halving on that occasion, and that didn't stop the market dropping significantly in a short amount of time when you had the macro fears around COVID and recession. So, but then what you did have is that you had a very fast recovery. Obviously, then that was supported by the banks and the money printing as well, which is a different story. But I do think that the halving has been a really good measure of telling you where you are in the Bitcoin cycle. And I'll keep referencing that chart and looking for guidance from that chart according to our long-term positioning until that breaks. As long as the clock is working, I'll continue to look up and see what time we are in the Bitcoin halving cycle. So, but in the short term, I don't think it's going to make a difference, Larry. I think once the investors are running to the exits and panicking, the fundamental stories and the halving story count for very little.
Okay, so what I'm hearing from our discussion is right now we're kind of looking at maybe a flat line of growth, maybe a little up, maybe a little down, kind of waiting to see what happens. And if the chart that's been 100% accurate is correct, we have to expect that the digital assets are going to go down. There's a much greater probability that in the next 6 months, we're going to see a decline in the digital asset pricing as opposed to this spike going up. So that would be something that, I guess we would look to see as we normally do, is how do we really avoid some of the downside, which is half of our returns have been our ability to do that and the uniqueness of the charts and our ability to read them. I want to jump to something else and conclude with this because I think this is probably the most important thing going on right now in the financial world, and I think it's going to affect everything. I don't know how many of you are familiar with the Bank of International Settlements and the group that kind of runs that. And so if you think of them at the top, and then you've got some of your other bigger world banks throughout that kind of report up, and then of course you've got all your other banks in all the different countries. The Bank of International Settlements, and they've gotten on and they basically said that they have created a world digital currency. And while everyone in their own country will have their own fiat currency, it will all translate into this one world digital currency. And what the guy was talking about, and I'd be happy to send you guys this, but I know you know this, what he was talking about is how great it is that they will know everything about every penny that everyone in the world spends, whether you spent a $5 bill, a $1 bill, 50 cents, where you went to eat, what coffee you bought, what movie you saw, when, where, time stamped. And what he was talking about is how great is it that we can actually control it. We can control where money goes, where it's spent, how much is spent, in what area, because we can turn it on and turn it off with a switch. We could not allow you to go out to eat again for a week if we don't want, if we don't like what you're saying. We don't like what you posted on social media. We can literally turn off your access to digital currency. And so what you have is you've got their digital currency that they want to have the world connected to. And then you've got the one that we play in. So when you think about it, their one world, and I call it a handful of people, whether it's a few thousand that control the world, they want to do that, or us and millions of others like us who want to be part of an independent world. One of those two are going to win. How important is the independent digital to where these leaders and government officials want to take us? Because if we end up with what they want to do, wow, we're really just puppets in a game. How's that going to affect that fight that's going on?
Yeah, I mean,
Graham?
Bilal, God, can somebody help us?
Larry, that question is way above our pay grades because actually, I mean, we'll be, kind of fighting against thunder. But yeah, so I mean, I think there is a big push for surveillance, and I think all central bank digital currencies provide that particular government the ability to pre-program the monitoring of what you're doing with that particular digital rand or that digital dollar or digital yuan or whatever it is. And that has been brewing for a long time, and it's something people are aware of. What is, I mean, it's this question isn't about making money. This is a question about freedom and having each person having the ability to do what they want with their money. Now, we as asset managers, we don't know which way that this actually plays out, and our job is to deliver returns to our investors. So it is a very real risk that central bank digital currencies will be created, and those are very different from your decentralized cryptocurrencies. These are your hyper centralized control structure currencies and credit card and EFTs and digital currency as well. Now, as an asset manager, what we're saying is, and I think Grant touched on it on previous podcasts, is it is a theme that we see as being quite likely to occur. And if that theme occurs, how do we invest well for that theme? And we think that the settlement layer for those central bank digital currencies will be either through Ripple or Quantum. And really the way to benefit from that trend, if it does occur, is for us to have those holdings where we can actually earn a fee from the switch that happens between those central bank digital currencies. For the sake of freedom, I mean, I think that is for everyone in the world to push back against digital currencies if they do not want to have their money under surveillance. And it's not really an asset management consideration, but rather a consideration of each individual as it comes about. And again, I mean, surveillance. I mean, I'm not putting out a view that I'm anti-surveillance, right? What I'm saying is, surveillance could technically reduce many crimes. It could technically reduce many bad things in the world, and leave a trail behind to help law enforcement to prosecute wrongdoers. The the issue becomes when it is subjective as to who is a wrongdoer. So, Larry, as you pointed out, if you say something that is misaligned or opposing to the current government, is that really a crime or is that free speech? And what is the consequence of that? But listen, if are dealing in illegal drugs or illegal firearms, or and it's clearly a bad thing, then those people could be better prosecuted. My sort of jaded view on the world is, I think the people that are um dealing in huge illegal arms and illegal drugs and those things anyway will have the ability to bribe the biggest control structures and hide behind getting prosecuted anyway. So yeah, I think really what we're talking about is reducing the rats and mice crime
Well,
of the
I,
low level, but not
can I
really
Well,
taking out
can
the
I just
when's the
quickly
last
expand on
biggest
time?
that,
syndicates in the world.
Larry? B, I think
Yeah.
summarizes that well. In many respects, it comes down to almost election issues, or where a political movement will represent a certain mindset and what's considered to be acceptable in terms of having one's privacy respected and honored. So there's going to be, like anything in life, there's going to be this fine line between following the money for bad actors and allowing one's privacy, because that sort of privacy and monitoring can end up in the wrong hands, and bad things can happen in that same vein. So the whole appeal about, if we go back 12 years with Bitcoin being its decentralized status as an appealing way to transact and hold your value and all that sort of thing, there's going to be a very big and strong support for that. So it could well come down to a version of the two that the world sort of lives with.
Well, Glenn, when's the last time you found that you can trust any government and the people in it once they get control?
I see this is now becoming a political podcast. So, well, yeah.
You forget that Glenn needs to make sure that he gets his
I love
visa
everything America
extended.
stands for.
Yeah, I love everything America stands for
Yeah.
too.
So, but I mean,
But guys,
Let's make America great again.
this is we're heading towards a political discussion here, but we all know that there's no perfect government and there's no perfect system. Just some are better and more efficient and work better than others. So, as long as human beings are involved, there's going to be no perfect system. There's always going to be nepotism, backdoor dealing, and unfortunately, a grip and want to maintain power. So that ain't ever going to change in our lifetime and my kids' lifetime, I'm sure. But we trust in the fact that there's enough checks and balances to find a system that will best cater for all these issues that we are discussing now. Because if you have, to your point, Larry, you have, the world central bank, if you like, knowing when you bought your pizza and what time. There's going to be many people and those in power and are not going to enjoy this. The average guy that's tired of worrying about his wife nitpicking where he's going and so on, he's going to lose his independence and privacy. So, it just doesn't. We've got. I'll give an example. We've got this thing called the 360, where you can monitor where your child is, and it's done for good. It's done for good reason. But my daughter, who's now 21, and my son is 20, not that they up to no good, whether they are or not, they don't feel comfortable with us monitoring them as young adults, and quite rightly so. So this is just a whole nother version. That's within a family where everyone loves each other, and it's a close knit family where things are done for the right reasons. And I agree with them. So in that little microcosm of an example, people will ultimately vote what they deem to be acceptable and tolerable and what's not. So I believe that's where something like this would go.
all right. Well, a couple of things. This won't be voted upon. That's number one. So don't worry about that. Your microcosm of your family of 5 or 6, which is great, but there are 8 billion other people in the U.S. But the point I'm also making is the way the way that that doesn't happen is when people decide, you know what, if I start investing in the, I'll call it the decentralized aspects where they're not government controlled, if I start going in there, then I, the people, or we, the people, start controlling how we're going to do business with each other, as opposed to letting the government tell us how it's going to work and how it's not going to work. And a perfect example is, from what I have just been told, you've got Binance that left the US, right? You've got Kraken, I understand, is in the process of not wanting to do business again here in the US. And Coinbase, which really is also, from what I've been told, they're going to be moving offshore as well. So they won't be taking any deposits or allowing any US investors to utilize their platforms. So that's, I'm just looking at that and I'm saying, hey, from a marketing perspective, not only can people really get in on the ground floor by putting some money in there and leaving it long term, but the youth, your kids, my kids, Graham's 12 kids and the 15 that Bilal will have soon, they can start turning the direction of how things are going to be. So I'm just thinking of it as a potential marketing story that comes along with a lot of, strong upside.
Yeah. Larry, and just to add, I mean, Glenn made a joke about, they tracking what time you buy your pizza. I don't know if you remember that, but they actually, I mean, even the most trivial data or information can be useful. There was something once called the pizza meter or something where someone was tracking Pentagon pizza orders. And whenever there was a spike in Pentagon pizza orders, they knew that there would be a military strike to follow soon after that. Yeah, they basically worked out whenever things were, there was a rushed in action, the Pentagon would go to pizza. And I mean, I don't know if that's true. I mean, I read it somewhere, but that just gives you an idea of how something trivial could become some very useful information if pieced together. And then the question then just becomes, who's piecing that information together, and are they using it for you or against you? Which is why it becomes dangerous.
Yeah, well, maybe that's how Domino's became number one, is they heard about us going to war and people wanted, they got the munchies. So off it went. I think it also, the more pizza that was purchased, the greater the marijuana was smoked.
Yeah, I think to B's point there is that it's the guys are obviously in the operations room. They don't know how to leave, so they got to order pizza. So that signifies something's about to happen. So that's what that is. But Larry, I've thoroughly enjoyed this political podcast. Thanks very much, man.
It's no problem.
Vote for
All right,
Larry,
guys.
Larry for president.
Let me chip in with my
I'm voting
final
for
thoughts.
Larry.
You've got our vote. So that takes care of that.
I was thinking of running for president.
Right now, anyone's going to do a better job than the other guys.
Yeah, I could tell him I was accepted to the nut house.
All right. Thank
All
you
right,
very
guys,
much,
let's everybody.
Thanks, guys.